Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Mr. Jonathan Twomley. How you doing, sir?
I'm doing great, Michael. How are you?
I'm doing well. I just want to take this, our third episode here, probably 10 minutes or so, talk to the new investors. You and I have been very clear. People should watch your playlist. We're talking about the world. The world's going to change from the investing landscape, these cap rates and interest rates and all these things. It just couldn't keep going the way it was going. Well, now it's changed, right? Kind of hit a brick wall. Episode 1, we talked about distributions stopping. Episode 2, we talked about the Fed hopefully not being able to force to pivot. So let's talk to a new investor, right? The landscape's different. The last 2 years are over. One of my experts on Monday, Greg Dickerson, says good times never last, bad times never last. We've entered a bad time. So let's talk about opportunity, because again, what people don't realize is real wealth is created in recessions or bear markets. And we have just entered what will likely be a bear market, a year, 2 years in the making. I'm vibrating with excitement. I try to hide it. But I think there's a lot of opportunity, but you also have to do a lot of work. So what do you tell new investors today?
Yeah. So what I would say to new investors is you have to ignore all the media and the hype that you're hearing, right? Because both on the good side and the bad side, right?
Agreed.
What you typically see in a market cycle is, like, as the market goes up, more and more marginal players get drawn in, right? More and more cautious players are drawn in because when they're looking around, they're seeing other people making money, they're fearing missing out, right? And then what happens is then a lot of the new players get burned because they come in at the top, and then they're like, well, that was a bad idea, never doing that again, right? And the problem is that people spend too much time sort of looking at what everybody else is doing and following the herd, and not enough time really understanding how these assets work and how these investments work, right? And how the market works, frankly. So what you see is, like, investor psychology is often, like, inversely related to the actual risk in the market, right? And I spent a lot of time talking about this, in 2018, 2019, when I was forecasting a recession on the horizon, and everybody thought I was a moron.
Me too. I sold some. Yeah.
It's, maybe I'm a moron, but, like, eventually, even a broken clock is right, every 12 hours or whatever it is. So, like,
that's funny.
So here I am, broken clock, coming back around to where I was a couple of years ago. But the things I used to talk about a lot were that, so the way investor psychology works is there's a lot of people out there who aren't interested in doing the work, right? So so instead of doing the work, they look around and see what everybody else is doing. And if after a crash, everybody's going, oh, real estate's risky, stocks are risky, because we look at all the money people just lost. It's risky, right? And then at the same time, when the market is booming and people have been making money, right, they're looking around going, oh, it's safe, everybody's making money. The problem is those are exactly opposite to reality, right? The safest time to invest is immediately after a crash, right?
Agreed.
The most dangerous time to invest is when there hasn't been a crash for a long time and everybody is saying how great, everything is, that, real estate's the best thing since Shinola, right? And so you have to look at what's going on in the market and what other people are saying, and take it with a huge grain of salt, and be contrarian, right? You want to be like reflexively contrarian, where, like, oh, they said it's great, so therefore it's bad, right? Just reflexively. That's not smart either. That's also lazy. But what you want to do is really understand the market, understand it with some kind of historical perspective, see how the market behaves under varying circumstances, and then really understand that it has to do with the flows of capital. And when less capital is going into a market, prices are more attractive, and inevitably it's going to go back up, right? So when you've had a crash just recently, the chances of, like, another crash it's very unlikely. There's not really much more for it to crash, right? I mean, it's not saying it could never crash again, but I think your worst case scenario after a major crash is flat, right, for a while. right? And so, so what I want to say to new investors is, yes, we're in a sort of a period of uncertainty at the moment, and it's looking like the market is going to continue to kind of head downward for a while. Now is a really good time to be really learning the market, really studying it, and so that when the opportunity is there, you recognize it. Because what will happen is that most people will not recognize it. Most people will be licking their wounds. When they should be getting back into the market, they're going to be telling everybody they know what a bad idea real estate investing is, and you should never do it. When, frankly, when you hear that, you should take that as a signal that now is the time to buy, right? When it's just like that old rule of like when the shoe shine guy is telling you, giving you stock tips, it's time to sell. When everybody is telling you how bad an idea it is to invest in real estate, because they lost money, that should be your signal to start, like your ears should perk up at that, and you should say, okay, the time of opportunity is probably right around the corner if it's not here right now. So,
I agree.
So do the work and you'll be rewarded.
Yeah, what I would tell a new investor is, frankly, there's a couple of things that I'm telling people on my channel. First and foremost, I think 2023 has a good chance of being the worst economic year of my adult life when you look at the world economy. That said, when I step back and look at my micro world, right, the world that Olivia and I live in, I'm excited, right? We spent years getting ready for this. We took all our 30-year debt, or all our variable rate debt, made it 30-year fixed. Everything's below 4. And we stacked some dry powder so we can make some moves. And oh, by the way, I just got a deal that I close on Monday out of the MLS, right? I haven't got a deal out of the MLS in 3+ years. Mm-hmm. It was on the market. Everybody saw it. It had a couple of ugly things, but it's a great property, and I'll share the full journey on the channel. But I got it for almost 25% off list price because it was listed on the market. It was listed for a while. So, I mean, deals are out there. I look forward to making moves and, sharing that on my channel. But yeah, first time I got a deal in the MLS in over 3 years. I'll close on Monday. They're out there. I just do the work. Yeah. I'm just, every day I do the work. I've looked for 3 years in my market. That's 1,000 days, rough and tough. I got a deal out of the MLS. Anybody else could have done it. So I'm excited by what's coming because lots of people are going to run away. They're going to see all these crash videos, and I'm just going to go, okay, I'll take that one, and I'll take that one, and I'll take that one. So.
Yeah, I mean, I'm actually, I'll tell you what I'm excited about. I mean, as a lot of you guys know, I recently bought my first hotel. We're in the process of rehabbing it. Hotels are actually pretty inflation resistant because you can change your rates every day. So as your costs are going up, you can raise your room rates every single day. So, just in the same way that people say, well, apartments are great because every year you get to raise your rates, right? You get to raise your rents to keep up with inflation. In a hotel, you can do that every single day, right? And so, there's always people traveling, right? It's not like the economy stops. I would be more wary of being sort of like in a business hotel situation where businesses are going to cut business travel to save costs, but for individuals, they're still going to be taking vacations. And frankly, with inflation, maybe they're not going to be going to Europe, right? They're going to be staying here doing driving vacations,
go somewhere. Yep.
Like that. So anyway, so what I'm excited about is that, I'm looking to do the next hotel deal, and there's a lot of, assets out there owned by mom and pops that have been sitting on the market for a while already, right? I mean, they've been on the market for quite some time because there's a, limited number of people who know how to operate these deals.
Yeah, tackle those things. Yeah.
Yeah. It's just going to get worse. I mean, there's going to be even more blood in the water for some of these tired old assets. And I'm looking forward to, snapping some of them up at like real bargain based prices, right? So
this is awesome.
Yeah. So that's very exciting to me. And I think the same thing is going to happen with multifamily as well. And I think the pool of investors is bigger in multifamily, and kind of like the bigger the asset, ironically, like the bigger the pool will get, the deeper the pools of capital get. So it probably won't fall as far for like the really high quality assets. But I think, if you're playing in the kind of like, 5 to 20 unit space, you
Right
you
here.
may
Yes.
you may be seeing some real opportunity there as well,
I agree.
where, if you have some dry powder and you have a good relationship with a lender, or, you have a pool of friends who can, go in and put together like 35% down payment on some of these assets to make a lender feel secure, you're going to have the ability to go get some assets at some attractive prices. So
yeah.
Yeah.
This is fun. Jonathan, where can people follow you on Facebook? You have a great group that's very active. What is that again?
Yeah, so please go to the multifamily investment community. I've got a few questions that you have to answer before you come in, so please answer those questions. It's a great group. Always happy to answer your questions in there about multifamily investing. And also, if you want to get on my email list and get this free download, go to apartmentinvestorsclub.com. Apartmentinvestorsclub.com. You can get this free checklist. It tells you everything you need to know about how to syndicate a deal, just the whole roadmap to syndicating a deal, and it's free on the website.
Yeah, I can't believe you give that away for free. I went and got it. I learned a lot, folks. Go get the free download. It is it's worth the time. Thanks, Jonathan.
Absolutely. Thank you.